So, let's talk about Microsoft. I mean, what a phenomenal run its stock has been on, right? But lately, the technical charts are starting to flash some interesting signals. So the big question is the rally finally over, or is this just a quick pit stop? Let's break down the data and see what's really going on. Okay, let's start with the big number on the screen. This is where Microsoft is trading right now. And a number like this, it tells an incredible story of success over the last year. It's really a testament to the company's powerhouse performance and, of course, massive investor confidence. But that right there is the central question we're tackling today. I mean, when a stock climbs this high and this fast, you have to ask, can it possibly keep going? Is this unbelievable winning streak about to take a well-deserved breather? That's exactly what we're here to find out. So, here's how we're going to break it all down. First, we'll get the big picture of Microsoft's strength. Then, we'll start looking for any potential cracks in the armor. After that, we'll follow the money, check the engine's momentum, and finally, try to map out what could happen next. First up, let's look at the big picture. And from 30,000 feet, the numbers show a company in seriously strong technical health. So think of this number like a report card for the stock's overall health. The analysis gives Microsoft a 76.45. Now, anything over 70 is considered pretty strong, so from this high-level view, yeah, it gets a clean bill of health. And a big reason for that awesome score? Well, you're looking at it. The stock is trading way up there, super close to its 52-week high. That's a classic, textbook sign of a powerful and sustained uptrend. And on top of that, the analysis shows a risk-to-reward ratio of just over 3. To put it simply, this is telling us that over the recent past, the potential upside for investors has been about 3 times greater than the potential downside. I mean, that's another very positive sign to add to the pile. Okay, so everything looks great, right? Almost too great. And that's where the plot thickens. As we move into our next section, we got to ask, is this picture of perfect health maybe hiding a few underlying issues? Are there some cracks starting to show in the armor?
And this, right here, really lays out the whole puzzle for us. On the one hand, you've got all those strong bullish signals we just covered. But on the other hand, a few warning flags are starting to pop up. Things like weakening momentum and even some signs of selling pressure.
So let's dig into one of those warnings, shall we? The stock's price has just recently dipped below its 5-day and 10-day moving averages. It's kind of like a marathon runner who's been setting this blistering pace, but suddenly they're just a few steps behind where they were a week ago. It's a classic early signal that short-term momentum might be starting to fade. So you got to wonder what's really going on under the hood. To figure that out, we're going to do what the pros do. We're going to follow the money and take a hard look at the trading volume. And the tool we're going to use for this is called the accumulation/distribution oscillator. I know it's a mouthful. Just call it ADOSC. It's a pretty slick way to track whether the big institutional investors are buying up the stock, that's accumulation, or if they're quietly selling it off, which we call distribution.
So what does the ADOSC tell us about Microsoft? Well, it's sitting at a negative 21 million. This points towards recent distribution. It means that even while the price is staying high, some of the big players might be quietly cashing in and taking some profits off the table.
All right, so we followed the money. Now it's time to pop the hood and check the engine itself. Is the momentum, the raw power that pushed the stock this high, still there? Okay, our first diagnostic tool is the MACD. Now, the easiest way to think about this is like a race between two runners, and they each represent different price trends. The MACD just measures the distance between them. If that gap is getting wider, it means bullish momentum is strong. But if that gap starts to shrink, well, it means the trend is getting tired. And what do we see with Microsoft? You guessed it, that gap is in fact narrowing. Now, the MACD is still positive, which is good, means the overall uptrend is still intact, but the fact that it's shrinking tells us that the trend is losing steam. The engine's still running, but it might be running on fumes. Okay, next up, the RSI, or Relative Strength Index. Just think of this one as the stock's fuel gauge. Super simple. A reading over 70 suggests the stock is overbought, maybe running a little too hot, and a reading below 30 suggests it's oversold. So where is Microsoft's needle pointing? Well, it's parked right in the middle, in neutral territory. This tells us the stock isn't overbought, but it's not oversold either. It really just points to a state of balance, which reinforces this whole idea of a pause. This quote from the report we're looking at really just nails it. We have these mixed signals where the big picture looks fantastic, but the underlying momentum indicators are all suggesting that this powerful trend is getting pretty tired.
All right, we've looked at the big picture, the cracks in the armor, the money flow, and the engine's momentum. So what does it all mean? And more importantly, what happens next? And the big takeaway, the final verdict from all this data, is a single word: consolidation. Now, this isn't a five-alarm fire or a big bearish warning. It's simply a sign that the stock is taking a well-deserved pause, kind of moving sideways to digest the incredible gains it's made over the last year. And this table here, this is basically our roadmap for what to watch for. In the bullish scenario, if the price can punch through 526.39, the rally could be back on in a big way. In the bearish case, a drop below 512.17 could open the door for a deeper decline. And of course, if it just stays stuck between those two levels, this consolidation phase just continues.
So really, it all boils down to two key numbers. Burn these into your brain. Think of 526.39 as the ceiling. If the stock breaks through, the bulls are back in control. And 512.17 is the floor. If it breaks below that, the bears might take over. These are the lines in the sand. So when you put it all together, the picture is pretty clear. We're looking at a healthy, powerful company whose stock is simply taking a breath after a long, long sprint. And that leaves us with the final critical question for anyone watching Microsoft. Is this just a simple pause before the next climb, or is it the beginning of a much deeper exhale?